Welcome to the Planet MicroCap Showcase Virtual 2022. I'm your host, Robert Kraft, and now presenting is Doug Gaylor. He is the president and COO of Crexendo. It's a publicly traded company. The symbol is CXDO on NASDAQ. Doug, take it away.
Thanks, Robert. Greatly appreciate it. And thanks for having me on the Planet Micro Virtual Showcase here. Always like presenting to your audience, and hopefully they will come out of this presentation with a lot of great stuff on who Crexendo is and what we're doing out there. So to start with, obviously our safe harbor statement, which you'll probably see quite a few of if you're attending multiple presentations today. Just a little bit about myself, and Ron Vincent's not with me today, but I am the President and Chief Operating Officer here at Crexendo. I've been here for a little bit over 13 years now. All my career has been in telecom. I was with a company called Intertel prior to Crexendo, and Intertel was acquired by Mitel in 2008. So I was with Intertel for 20 years and Mitel for 2 years. And then after the Mitel acquisition, I stayed on with Mitel for 2 years and came over here to help our CEO run Crexendo 13 years ago, and great success ever since. And a little bit of background there, our CEO was also the CEO of Intertel. So he founded Intertel back in 1969, Steve Mahalo did. Grew it to a $500 million company before selling the company to Mitel in 2008 for $750 million. So when we talk about some of the success that we've had and some of the plans that we've got in the future, it's not our first rodeo. We've been doing this for quite some time and have had great success working together. And Ron Vincent, our CFO, has been my sidekick for the last 11 years. If you've seen any of our previous presentations to the MicroCap community, you know that Ron and I typically make these presentations together. And Ron's been with us for 11 years. Prior to that with Ernst & Young, and great CFO for the organization. So just a little background on who Crexendo is and what we do. So we are a complete cloud communication company. So when we talk about cloud communications, you're probably familiar with some of these acronyms on the screen here, but we're a unified communication as a service provider. What that means is we provide telecommunication services, business phone services for small, medium, and small enterprise businesses coast to coast. And so our UCaaS division is doing just that. It's selling those business telephone services to end user businesses. And about a year and a little bit over a year and 3 months ago, we acquired another company called NetSapiens. And NetSapiens had a platform that provides UCaaS services. So prior to that acquisition, Crexendo was just selling UCaaS services directly to end users. And with the acquisition of NetSapiens, we actually bought a platform that supplies the platform for about 205 other licensees that are also providing UCaaS services now using our platform. So that acquisition of NetSapiens got us the other two acronyms that you see on the right-hand side of the screen there, a software as a service model and an infrastructure as a service model, as we provide those platforms to these licensees to go out and sell UCaaS services to other end users. And then most recently, we introduced a contact center as a service, a CCaaS offering to our platform that's available through our UCaaS offering and through our platform offering on the software as a service and the infrastructure as a service solution. So we really feel like we round out all of the cloud communication choices is by having all of the UCaaS, SaaS, CCaaS, and IaaS solutions there. I like to always say it tongue-in-cheek that we're the best smart-ass choice in the market. So if you think about as a service, we cover all of the areas for cloud communications out there. So to give you a little bit more clarity on what we do and how we do it, I'm going to use this analogy here. So this is Crexendo at the top, and so we've got two segments. If you look at our financials out there, you'll see that we break it into two segments. Our telecom services segment is our classic legacy business. That's before the acquisition of NetSapiens. So that telecom services segment is selling our UCaaS solutions to end user customers out there. Got about 60,000 end users on our direct UCaaS offering out there. And to give you an idea, that direct UCaaS customer, about 21 stations on average, about $410 a month on average monthly recurring revenue per account. About $21 per station, average revenue per user out there. So that's a great, great model for us. I'll go into a little bit more color and detail on that as we go through the presentation. So that's the one segment that we've got. That segment's about 65% of our revenue today. About the other 35% of our revenue is from the acquisition that we did of NetSapiens in June of 2020. And that acquisition, or June of 2021, that acquisition is our software solutions segment. And so, as I was mentioning, that's a platform that we provide. And when we talk about platforms, you may be familiar with BroadSoft. Cisco bought BroadSoft 4 years ago. BroadSoft is the largest platform provider for UCaaS services in the country. So Cisco is number one with their BroadSoft platform. Microsoft recently bought Metaswitch about a year and a half ago. Metaswitch is the number 2 UCaaS platform provider in the country. And so we're really proud and pleased with the fact that we now have the 3rd largest platform out there in the United States with our acquisition of NetSapiens. So our platform today provides the UCaaS services for about 205 UCaaS platform licensees. So these licensees that are illustrated here on this screenshot here, will show you that of those 205 licensees, they currently service about 2.5 million end users in their customer base. So that means that overall, we're supporting over 2.5 million users on our platform out there, which makes us the 3rd largest platform provider in the United States behind Cisco and Microsoft. It's a pretty large accomplishment for us. We'll talk a little bit more about how we compete against those big guys here in a moment. But this is a really, really important illustration because, as you can see from the title of the slide, our stocked fishing pond, the important aspect here is that these 205 licensees, this is our stocked fishing pond for future acquisitions. So as I mentioned earlier, Steve and I have been working as CEO and COO of Crexendo, but we've been working together for 35 plus years now. And at our previous company, Intertel, we bought a lot of our resellers. Actually, over the course of about 15 years, we bought over 50 of our resellers out there. And we rolled them up into that $500 million organization that we built over time. So when we look at these 205 licensees out there that are all using our Crexendo platform today, they have 2.5 million end users out there. We estimate that the total revenue stream out of these 205 licensees is about $350 to $400 million worth of combined revenue. And these licensees may range anywhere from $2 million in revenue all the way up to our largest, which is probably in the 50, 60, $70 million range of revenue. So some really, really great opportunities here for future acquisitions. And so we've been highlighting over the course of the last year and 3 months since we purchased NetSapiens, we've been highlighting the fact that we love this model. And the reason we bought NetSapiens was because 1, they had a great platform. 2, there was a great monetary opportunity to grow the monetary revenues out of the organization. And 3, most importantly, was this licensee stock fishing pond base of customers that they had out there that eventually would be part of our acquisition strategy to grow the organization. And so with that stock fishing pond analogy, if you're a fisherman out there, you know that when you hit a fish on the line and the first thing you do is yell fish on. We just recently completed our acquisition of the first fish out of this fishing pond with a company out of Kansas City called Allegiant Technologies. So Allegiant Technologies, great acquisition for us. So if we look at the Allegiant Networks in Kansas City, this is our first fish out of the fishing pond. And this is a great acquisition for us because, again, it's one of our licensees that we secured through relationship building over the course of the last year. And it was just a great first acquisition for us to add to our company portfolio. So why is this a great acquisition for us? As we look at Crexendo, we've been growing organically and through inorganic acquisitions. So the NetSapiens acquisition was our first acquisition in June of 2021. And now this is a very strong accretive acquisition for us. It was just completed on November 1st of this year with Allegiant Technology. Very accretive acquisition, both to the top and bottom line. Allegiant was doing over $10 million in revenue in 2021, on track this year in 2022 for about $10.6 million in revenue. And so that's a very accretive strategy for us because not only were they doing great top line revenue and revenue growth there, but also very profitable to the bottom line. And we'll see great synergies out of this acquisition because as we look at it, they've got licensing costs with us with their licenses, so that'll go away. There's some other great cost synergies that we'll see out of the acquisition as well. So who is Allegiant and what do they do? So a regional local telecom company in the Kansas City, Missouri, and Kansas City, Kansas market. So they handle really the two-state area there, Kansas and Missouri, and a lot of the Midwest. So a lot of their customers are multi-location national account customers. So they've got customers in quite a few states, but really a big concentration on the Kansas and Missouri markets. But what we really liked about this acquisition is not just the business communication services that you see at the top of the chart here, which is the UCaaS services they offer, but they have a much stickier customer base. And their average size customer, where I mentioned ours was about 21 stations on the direct side. The Allegiant customer average size is about 92 stations, so a much larger customer. And they also have a stickier customer because they have multiple services that they offer to those customers. They offer managed services and data and IT services to these customers. And so when we look at their typical customer, not only are they buying one solution from them, which is their UCaaS solution, but they're typically doing two or three other solutions as well, which is managed services, IT services, and network support services. So it's a great opportunity for us to take some of their additional offerings and bring that into our portfolio to offer to our existing 60,000 end users out there. So we'll start kicking some of those other additional services off with managed services and IT services and network services to the Crexendo customer base over the course of the next few months. We're going to start rolling that out. So we're really excited about the growth opportunity, not only with the Allegiant internal growth, but the opportunity to take some of the services that they offer today and offer it to our customers across the board. So really excited about that acquisition. That's a great acquisition to add to our already very exciting story that we've got from a growth perspective and where we are from a Crexendo perspective overall. So if you look at where we are, the highlight of this slide is that we're soaring through the clouds. As a cloud communications company, that's what we concentrate on. We concentrate on cloud communications, and it's a tremendously fast growing industry right now. We'll talk about that in another slide coming up, but there's lots of opportunities still left in this telecom sector for growth. So we finished 2021 with 28.1 million in revenue. That was a 71% increase from 2020. Strong non-GAAP earnings as well. That 71% increase included 7 months of the NetSapiens acquisition. So when we look at that 28.1 in 2021, that included the NetSapiens acquisition that we did in, again, June of 2021. And then if you fast forward that to this year, through our third quarter, which we just announced at the first week of November. So our Q3 numbers, 2022, 9.1 million in total revenue for the quarter. That puts us year to date at 26.1 million. That's a 37% increase year over year. So really strong revenue growth on the top line. And then if you look at our earnings at the bottom line, really concentrating on non-GAAP. If you look at our GAAP loss there, that 696,000 in loss includes our intangible asset amortization from the acquisitions and stock comp expense. So we've really been focused on our non-GAAP and our adjusted EBITDA. And you can see really, really strong numbers here. Q3 2022 non-GAAP of 713K. Our adjusted EBITDA for Q3, 938K, and our adjusted EBITDA for year to date for the first 3 quarters of this year, 1.9 million. That's a 68% increase year over year from 2021. So really excited about the growth that we're seeing in the organization. And again, it's not our first rodeo. So we're really focused on the fundamentals. We do the right acquisitions. We do the right integrations. We get the right synergies out of these acquisitions. And you can see that in our numbers here. To give you an idea of how the services break out in those two segments, 5.23 million in the Q3 from our telecom services division, 3.87 from our software solutions division. So as I mentioned earlier, about a 65-35% split there. We always highlight our backlog because all of our customers, whether they're a direct end user customer or they're a software solutions licensee, they're all on long-term contracts with us, typically 36 or 60 months. So when we talk about our backlog is our contracted obligations that we've got out there that'll be recognized in our revenue stream over the course of the next 5 years. So currently our backlog at the end of Q3 was 43.4 million. So when we think about where we are dollars and cents wise, $26 million in total revenue year to date. That's about a $36 million run rate for this year without the acquisition. But our backlog is even more significant than that, 43.4 million. Now that'll be recognized over the course of 5 years. I'll show you how that lays out here in a moment on one of our other slides. but that's up 4% just from the end of 2021. So always talking about our backlog because that's guaranteed revenue that we've got lined up further on down the road. Really strong balance sheet with Crexendo. When we look at Crexendo today, balance sheet strong as could be. So cash at the end of Q3, 4.82 million. Virtually no debt on our books. There's only two pieces of debt on our books. We've got 1.8 million in debt for our building that we have here as our corporate headquarters here in Tempe, Arizona, right outside of Phoenix. And so that building is 1.8 million that we've got a mortgage on. The building's worth about $3.5–4 million. So we're currently looking at options to maybe even do a sale leaseback on that building to get that debt off the books and put more equity into the balance sheet. Not happening yet, but that's something that's under consideration. And again, the only other piece of debt that we've got on our balance sheet is the acquisition of Allegiant. As I mentioned, $10 million worth of revenue. We bought it for less than 1 times revenue. We bought it for $9.6 million. And that $9.6 million was $2 million in cash, so $1.1 million seller note that's part of that debt that I just mentioned on the balance sheet, and about 2.4 million shares of our stock. So it was a very, very great acquisition from us, especially from a valuation perspective, and allows us great opportunity for growth. As I mentioned, about 205 licensees reselling our platform, about 175 agents that sell our solutions to our direct end users. And I'll highlight that here in another slide coming up. So just a quick snapshot by the numbers. Some of these numbers we already reviewed, but just a couple of highlights here. 78% of our revenue is monthly recurring. So that's really, really important as you look at how you build a successful SaaS model or as a software model. The majority of our revenues today are monthly recurring revenue. So it's a very, very sticky revenue stream that you can see there. As I mentioned, our average revenue per customer, about $409. We've got those 60,000 direct end users and over 2.5 million total seats on our platform. So again, making us the third largest platform provider in the country here. And as we talk about that third largest, we're also the fastest growing. So Frost & Sullivan came out with a report at the end of last year that ranked all of the UCaaS providers and ranked Crexendo as the fastest growing UCaaS provider out there in the US. So again, really, really strong growth within the organization. Churn is something that we always highlight. We actually saw a decrease in our churn in 2021. We actually saw an increase in our churn that with COVID and the fact that a lot of our businesses are small and mid-sized businesses, we saw an increase in churn due to some of the financial headwinds and COVID in 2021. We're really proud to say that that number has come back down to almost pre-COVID levels at 0.75%. That's on a monthly basis. That's one of the lowest in the industries when you compare it to some of the bigger guys, the companies that you may recognize, the RingCentrals, the 8x8s, and the Vonages. Our churn rate is very, very low comparatively. So a lot of great things that we're doing within the organization. All of our data centers are all geo-redundant. So we've got 4 network data centers, one here in our office here in Phoenix and in Las Vegas. Grand Rapids, Michigan, and Dallas is our 4 data centers. And so really important as we sell our solutions with a lot of redundancy and a lot of resiliency within our platform. Just to give you a quick snapshot of the financial profile, we've already hit some of these numbers, but you can see the growth here. So through Q3, we're almost at the same level that we finished Q2 with, or 2021 with. So 26.1 million through Q3. Gross margins, really strong gross margins. We anticipate those gross margins will continue to go up. So 69% on the telecom services division, 69% on the software solutions division. But you'll see that software solutions gross margin has increased nicely from 2021 to 2022. We continue to see cost synergies out of that. And so we anticipate we'll be able to see these gross margins in the low 70% ranges here in Q1, Q2 of next year. And then product revenue is our phones that we sell. So obviously when we put our solutions out there, we have a phone component. So you'll see a lower gross margin on there, but still relatively competitive out there. So we really are in as a service type model. And so we anticipate we'll be able to see better gross margins as we continue to see synergies out of the organizations. Non-GAAP numbers, again, where we concentrate. So 1.6 million through Q3, that's 1.9 million in adjusted EBITDA. So again, really great trends there. And then operating expenses, you can see that the operating expenses continue to be very manageable. So you'll see a little bit of an increase in the R&D. That's how we just allocated some of the cost in R&D over the course of the last year from the acquisition at Sapiens. But a very, very good cost structure there from an expense perspective. And again, our management team really focused on cost management within the organization. Churn, as we mentioned, you can see that the churn has come down from where it was to where it is today. And so that's a very manageable level. And again, one of the lowest in the industry that you'll see out there. And finally, that backlog number that we talked about, 43 million, how you can see that lay out over the course of the next 5 years. So the nice part is by the end of Q4, we'll already have over $20 million worth of backlog that's ready for revenue in 2023. So that gives us a really strong runway. And that's what the benefit is of that recurring revenue model. So we've talked a lot about the growth that we've got in place. So how do we continue that growth? Well, future growth drivers really are focused on a couple of areas. One, on the software solution side, bringing on new logos, bringing on new platform upgrades with our existing software solutions licensees out there. So those are two great areas. The industry is growing rapidly. About 45% of the businesses in the U.S. have moved over to the cloud. So 55% of the U.S. market still hasn't moved to the cloud. So that means that not only are we growing rapidly, but all of our licensees that are selling the platform are growing as well. So we see a lot of platform upgrades coming from our licensees as they continue to grow. We also see new logos coming on board. We just announced in a press release just 2 months ago, a large Cisco BroadSoft reseller that's leaving Cisco and BroadSoft for their platform and moving over to Crexendo for their platform. So we hope that's the first of many of the largest player out there, Cisco BroadSoft, of platform migrations from Cisco over to the Crexendo platform. We continue to add more agents and partners on our direct side to sell our solutions out there. We've got nice enterprise and major accounts, especially with the acquisition of Allegiant. They've got some nice major accounts, and so we'll be expanding our major account focus there. Global markets right now, kind of immaterial as far as a number percentage, but we see great growth opportunities in the UK. We've got a facility in the UK. We've added 12 new logos in the UK over the course of the last year. So we see a tremendous opportunity for growth in the international markets. Aside from the UK, we've also got licensees in Australia, New Zealand, the Philippines. But we see a tremendous opportunity for growth in the global market. It's not a material number for us yet, but that as that number continues to grow, it'll become more of a material component of our revenue stream. And then finally, our roll-up strategy that we mentioned with that fishing pond. So with 205 licensees out there, we continually have discussions going with other licensees. And so, pulling the next fish out of the pond is really just a timing perspective. We want to make sure we get Allegiant integrated and synergized into the organization before we go get another fish out of the pond. But we've got plenty of fish out there and always have our line out there ready to pull in the next one. So a few last slides, and then we'll open it up for some question and answers from Robert. So when we look at our go-to-market strategy, how do we sell our solutions out there? As I mentioned, we've got the two segments. So the first two items here on our direct sales and on our agent sales, that's on the telecom services side. So we've got about 10 direct sales reps that sell on the direct side, selling our UCaaS solutions to small and mid-sized businesses directly. And then through our agents on the telecom services make up about 75% of the revenue on the telecom services segment section. And so they're out there selling to their customers and their relationships. And those agents might be copier companies or data companies or traditional telecom companies. And they're going out there and working with their customers to upgrade them and migrate them to the Crexendo solution. And then on the software solutions side, we're going out and selling new logos to customers, like I mentioned earlier, coming over from a Cisco or a Microsoft platform. We're going out there and selling it to other UCaaS companies, managed service providers, local exchange carriers, rural exchange carriers out there. So great opportunity for growth in our go-to-market strategies. And so the reason that I'm so excited about what we're doing is that we've got plenty of growth opportunities. We've done this before and we've got the model down to a science, but the communication opportunities are still tremendous. Only, as I mentioned earlier, 55% of the businesses in the country still have not moved to the cloud for their communications. And it's not a matter of if they move to the cloud, it's when. And we anticipate that over the course of the next 3 to 4 years, and so not just us, but Gartner, Frost and Sullivan, all the industry experts, show that that number will be down in the single digits in the next 4 years. So that means that there's still a lot of migration that's going to happen from traditional premise-based equipment providers like the Avayas and the Mitels of the world, those customers moving over to the cloud. So when we look at statistics like this and we see how much opportunity there is for growth over the next 3 years, we're extremely excited because we feel like we're in the catbird seat. We've got tremendous opportunity to take advantage of that growth in the industry. And it's not just here in the US, there's tremendous more opportunity for growth internationally. And so that's why we've got facilities over in the UK and seeing tremendous growth over there. Again, it's not a material number in our total revenue stream yet, but we're seeing great adoption over there because less competition and still more opportunities for growth because less adoption of the cloud in the EMEA markets over there. So the last two slides here is what we sell. So our solutions, again, is our UCaaS solution. We've got our own Crexendo branded phones, our own mobility solutions, our own collaboration solutions. So we're using Zoom for this call today. We could easily be using the Crexendo HD solution for our collaboration. And so we have a collaboration tool, a mobility tool, and all of the phones out there. But what makes us unique over our competition is that we have a 100% uptime guarantee. When customers think about moving to the cloud, they're always worried about what happens if they can't afford for their communications to be down. We offer, and we're the only ones out there in the industry offering a 100% uptime guarantee. We feel that confident because of our geo-redundant design of our data centers and the resiliencies and the redundancies that we've built into our solutions. We also have a 100 lifetime warranty on our telephones that we brand as the Crexendo phones out there. So those two components make us really, really unique out there in the industry compared to our competitors of the Ring Centrals and the 8x8s and the Vonages of the world. So the last thing, and then we'll turn it over to Robert for some questions, is why Crexendo? So obviously you've hopefully heard a lot of great things of what we're doing out there and how we're growing our business and focused on the fundamentals. But most importantly, it's what we've done to make sure that we're meeting our commitments over the last 3 or 4 years. We've been talking to a lot of you over the course of the last 3 or 4 years, introducing you to the Crexendo story. So 3 or 4 years ago, we weren't profitable. We talked about the fact that our first goal was to get to profitability. We did that GAAP profitability in 2019 and 2020. We talked about the fact that we were going to organically uplist. We were on the OTC, and we did that. We successfully organically uplisted with no raises, no reverse splits. So we organically uplisted from the OTC to the NASDAQ in 2020. We followed that with a successful raise, capital raise. We did an S1 in September of 2020. And we successfully raised $12 million that helped us get the capital needed to go do our first and major acquisition of NetSapiens. That acquisition was completed in June of 2021, which we mentioned. And so we used a lot of that raise off the S1 to do that acquisition. And then we talked about the fishing pond and talked about going fishing in our fishing pond and pulling out the first licensee. And that was completed just in the last few weeks. So we have a great track record of meeting our commitments that we've told to the investment community. We feel our stock is extremely undervalued today because as you look at all of our competitors out there, they're extremely leveraged. They have really upside down balance sheets. And so when you look at Crexendo, great organic growth, great inorganic growth, great opportunity for future success, and a very, very pristine balance sheet. So we really feel like we're poised to take advantage of the industry and all the growth that the industry still has to offer. So with that, Robert, I will turn it back over to you with any questions and look forward to giving you all the right answers out there.
Very good. Well, Doug, thank you very much for your presentation here today. We got time for one question, about a minute and a half left here. So, we're managing, and I'm asking this to all the companies that are presenting here. We're managing through tough markets right now. What measures is the company taking to manage some of the macroeconomic pressures that are currently affecting most microcap companies across the board?
Sure. Yeah. We're not in a recession-proof industry, but we're pretty darn close to it. Every business out there has got communications and has communications. So we're a service that doesn't go away. And right now, our pitch to businesses is that our solutions typically save them money. So in the tough economic times that we're facing right now, businesses are looking at ways to save money, become more efficient, become more productive. And that's what our solutions do. Our solutions allow them to be more efficient, more productive, communicate better. and in many cases save them money on their monthly telecom expenses. So we're out there, we're growing. We feel really, really confident that our industry is going to continue to grow. So even with the recessionary headwinds that we've got out there, we don't see that slowing down our growth. And we're committed to our message out there to our end user prospects and customers that, hey, we're going to come help you through these tough times with better solutions that help you save money.
Very good. All right. Well, Doug, we're there. Thank you so much for your presentation here today. Everybody watching, thank you for participating and hearing Doug's presentation, and enjoy the rest of the event.
Thanks, Robert. Thanks, everybody. Appreciate it.